Hi, welcome to the market alert for Wednesday 29th of November 2017. So yesterday the pound moved lower, but this was as Barmy Carney was speaking yesterday. 6:45 the signal came in. He was speaking from 7 a.m. and the market really didn't like what he got to say, even though what he was saying was positive, and that's probably because, like the rest of us, we don't believe a single word that central bankers say anymore. So the market saw some selling, it saw testing, trying to bring the market back a bit more here off this bar. Slight testing here because the market's coming off the lows. Another test there, but just no follow through. And they keep testing to see if anybody wants to buy, drop the price down. No buy orders. And eventually they think, right, well, let's slam it. They slam the price down, and then the market trades sideways before we see things start to move back to the upside there. And then you'll see the buying come into the market, but it doesn't come until this bar. And what happens here is the market shoots up and then it follows through with the buying. And this is the US dollar reaction to Steve Mnuchin, and also the I think they revealed the tax cuts and plans yesterday as well. That said, the pound is still moving to the upside. We need to throw in another. If I select one first, that would help. Another sort of resistance level here. I think this one's playing havoc with this. Let's just see if that's the case. There we go. So we've got the market moving to the upside. It's got to break this area here, 1340 to 1, in order to move higher. I would also consider doing this as well, and that's from this high down to this low. And you'll see here we've got a 62% and a 76% in this area if the market continues to move to the upside there. In the Dow, as I said yesterday, they were either going to play catch up. We know they're going to go for 24,000. There were 361 points yesterday. There isn't any more, as you can see from the chart. We kicked off with a buy signal yesterday, which is down in this area here. It was a bit of weakness to begin with, then the buying came in, followed by some selling. However, this bar here, let's see if I can widen this out a bit, just make it easier for you to see. Drag the chart across. This bar here is an interesting one. In fact, let me just use the crosshairs first so you can see it, and then I'll use the drawing tool. So you can see there, very high volume, very, very narrow range. It's talk about buying all the sell orders that came in on this bar, and that soon disappeared. And then we see the market trade sideways to higher, and then thinking that the market wasn't going to do a lot, Mnuchin, before he speaks, you see massive surge in volume there, brings the market up during the time that central bankers and Mnuchin are about to speak, and then all of a sudden we get a shakeout. This price bar isn't highlighted, but it's one that I keep telling you to look out for. Watch the market coming off the lows, closing within 50%. If you divide the bar by 3/3, it's back into, well, it's 50% on this particular one, but if it's in the sort of 2/3, closes above the bottom third, divide that, then it, and the volume is ultra high, as you see here, then expect the market to move higher. That's because that's how it works. The opposite for selling. See the buying, then you get the signals, and the market is free to move higher. Bit of selling here, but finish off pushing the market higher, and then you can see them taking the profits at the resistance level up here, which is going to be 23,850. So 150 points off the all-time high, off the 24,000 for this market. So the all-time high now sits at 23,852, and just pop this on here, have we covered this in the overnight? No, 47 is the highest so far. So the Dow is going to hit 24,000. I've said when we went through 23,000, and it will continue to do so because they want the market higher. The new year will be, if anything is going to happen, it's going to take place, and it's not going to happen before Christmas. Nothing happens before Christmas unless it's geopolitical or Rocket Man decides to do something, and Trump obviously retaliates. But other than that, it's the status quo: Santa rally and bankers' bonuses. So news, what have we got? Nothing major really there. OPEC meetings, well, we know that's a con anyway. It's a cartel, always has been a con. Barmy Carney's out again today, and Dudley's out today as well. They're both speaking 1:30 and 2 p.m. So Carney speaking before the Dow opens. And they're wheeling out Yellen today as well, so a lot going on today. Yellen speaking at 3 p.m. No doubt going to boost the market up to 24,000 when she speaks as well, as she's leaving office in February also. Right, quick look at the implied volatility. And in the implied volatility, we're down slightly. Not an awful lot actually, 54 to 39. For yesterday. Now, given the market put on a fairer number of points yesterday, 200 points, finishing 160 up, you'd expect this to be a lot lower, but it wasn't. Right, just to finish off with Bitcoin, I got a lot of questions about this yesterday, so I just want to tell you what I've been doing with this and just show you a couple of charts as well. So this is Bitcoin inside of PPT charts, but before you get too excited, just hang on a second. Let me just tidy this up a bit. Yeah, you can see the market's moved higher. You can see the signals on the chart. But a couple of interesting developments this week with regards to this. On Monday, I thought, well, I'll have a bit more of this. It's going to 10,000. And phoned ETX because if you have a look on the software and you right-click on a BTC USD, there is no order ticket. And that's because when I phoned them and questioned them about it and said, you know, come on, what's the issue? They said that they will take no more bets to the upside. There are one or two that are still doing it, but because it's a one-way bet with Bitcoin, they're not allowing any spread betting from ETX at the moment. This is what I was told by a chap called Steve. And we just got to wait and see if they actually bring it back on stream. So even though you can see it in the software by just creating the symbol and whatever, it's there, you can't trade it with ETX at the moment. However, the good news is, as you'll see here, it's already covered the 10,000 overnight. Market's off the high at the moment. So there's a good chance we're going to get a pullback off this. And there's also something else to throw into the mix as well. And that is this. I don't know whether you're aware of it, but if you, as a regular listener to the Market Alert, you will know that the Dow has been rising because of the increase in futures trading to the downside in the VIX index, and by selling the volatility, this pushes the Dow higher. Well, as luck would have it, as Del Boy would say, the CME plan to launch a futures contract. Now, this is an interesting one because the question is, what impact is it going to have on something that is decentralized? That's the first question. Initially, I would say it's going to see Bitcoin move to the upside because there's an awful lot of institutional money sitting on the sidelines waiting to come in and take advantage and have a piece of the action. There's no doubts about that. The premise of launching the Bitcoin, the official story, of course, is that it will temper the volatility because you'll be able to short Bitcoin with a futures contract. Now, the futures contract doesn't settle in Bitcoins, it actually settles in cash, so you have to settle in cash, which is slightly odd given that it's a futures contract against what is effectively decentralized cryptocurrency, digital currency, where you have to settle in the fiat currency. So for me, taking the conspiracy angle on this one, because I can't see any other reason why they would do this, initially a move to the upside when it does get launched. The announcement was on the website a couple of weeks ago saying the 11th of December, but that has since been removed pending CTFC approval. So we're going to have to wait and see when it does. But I believe that this has got an ulterior motive, the same as the volatility index is hijacked, and the Fed and co being selling into that to move the Dow higher. You're going to see this one a way of tempering the takeover of the cryptocurrencies from the fiat system. Bitcoin is here to stay. Yes, it's in a bubble at the moment. But a bit like the internet, the start of email and all the rest of it when it was frowned upon, never work, etc. It is going to work because of the blockchain mechanism. I'm not going to go into that. Very, very interesting times. Certainly going to be a change. There's going to be all sorts of other things coming out, and I'm certainly looking forward to the day when the precious metals are not going to be manipulated by Deutsche Bank and co, because it's outside, or there's a system outside that will allow and stop the manipulation by the central banks of all markets. So this is just the beginning of something very exciting that we're going to see unfold in the next few years. I don't fully understand it, don't profess to, but one thing that I do know, I can see that there's something here that isn't going to be a 10-minute wonder. I don't see that at all because of the blockchain mechanism. Certainly a bubble, no doubts about that at the moment, but then we had that with the Nasdaq bubble in 1999-2000. And if you go and look at Amazon now, which was part of that then, when it all came crashing down, it all then returned back to all-time high. Let me just show you the chart of that. Okay, so this is the Nasdaq chart. You can see that 1998, same thing, .com bubble. People buying off the internet, wasn't here to stay. Got your drop down, your retracement, and all the way back down to where we started. Bitcoin isn't going to go back down to $10 a coin though. Slightly different in that sense. But then you see the market eventually establish itself, comes back, retests in 2009, obviously with the 2008 crash. But look where it is now, and this is why. I can't think of his name, the chap that owns Amazon. I can see him, but I can't think of his name. Sitting on 93 billion now, but going back to here, it was all never going to work. People wouldn't read books off digital screens, etc. So it's just a matter of change, and that's going to be the same with Bitcoin in the longer term. Certainly, we've got that bubble situation at the moment. Again, if you look at the monthly chart, there's no doubts about that. You can see exceptional spike to the upside there, and again you'll get some sort of a pullback before it continues at some point, and that's where the CME futures is going to come in and play a hand. They'll try and suppress it, but what other thing you've got to keep in mind here as well, which is what caught a lot of these brokers and spread bettors out at the weekend. Oh, and there's one more thing I want to mention about that, which I'll come to in a second before I conclude, is that Bitcoin trades 24/7. So it's very difficult for these. They're going to have to either up their game and start thinking about trading 24/7 on the Bitcoin futures electronically in order to hedge, because this is why, in my opinion, ETX and others, we're not taking any bets at the moment, is because they may have just been caught with their trousers down thinking this was a joke, and it's far from it. The other thing as well that I noticed yesterday, and this is why I'm not recommending it at the moment, I've been looking at it, the size of the spread has been increased as well. It was 25 points. It's now, as you can see there, 40. It says 40-30 there. It's actually there you go, 40 point spread. So they've widened the spread. So like I say, it's not possible to intraday trade this. This is a long-term position based on pullbacks at the moment, unless of course when the CME comes on board they actually reduce it. So another thing that's a negative at the moment as far as spread betting is concerned. Right, and also of course, as I say, if the weekend, you can't spread bet over the weekend. So if you're on the wrong side of it and it dropped £2,000 or £3,000 pounds or dollars, then you won't get out. So at the moment it's you don't want to hold a position over the weekend, even if you could trade it, for that very reason. So say it's the beginning of something that's coming and will be very lucrative from a spread betting point of view at some point, but not at the moment because of the size of the spread for you're going to have to trade it longer term. You can't intraday trade it, and also there's that problem of the weekend, unless you hedge it, of course, by selling short on the Friday before the close if you're long, and then it's hedged. So one will offset the other, but again, you've got to make sure that the MT4 platform allows for hedging as well. But more on this going forward. I just thought I'd answer a few of the questions that I received yesterday. Right, that'll do it for this one, and a bit longer than normal. And that'll do it. Anything to report today, I'll let you know. Other than that, as ever, thanks for watching. See you in the next one.